Welcome back to the channel, guys. It's Caleb, the Heikin Ashi investor, and we are here today with the weekly review of the stock market for Friday 8/18, looking at it through the lens of Heikin Ashi technique. So, several weeks into this series now, hopefully you're starting to get a hang of what it is we're trying to do with Heikin Ashi and how we are viewing the stock market. This week saw more follow through to the downside on all the major index ETFs. We're looking at the QQQ, the NASDAQ ETF right now on a weekly time frame. And as you can see over here on the right hand side, after our doji candle, we broke to the downside and we have even more downside now. This is a larger candle with no upper wick, so a lot of momentum pushing it down to the downside. Kicking over to the daily chart of the QQQ. Let's see here. On this, we have, let me zoom in here nice and big for you. A lot of consistent selling. So 12 straight red candles, which means price is moving lower on average. And we have pushed all the way down here through two different swing lows. We have one right here and another right here that has been broken to the downside, as well as our price action indicator down here, the delta that takes the average of the Heikin Ashi open and close and can sometimes be a leading indicator, is showing us another move down, and this time below the zero line. So nothing bullish about this scenario right now. Moving into the SPY, back over here to the weekly chart. So identical to the QQQ in that regard. As far as on the weekly, we have a big bearish candle to the downside with no upper wick, and we broke through the bottom of the doji last week, and then this week we closed with another big bearish candle, and just now on the weekly crossing over the zero line. So that's not good. You can see back here in February of the year we broke the zero line, and from the time we did that, we had 1, 2, 3 more weeks to the downside. On the daily chart for the SPY, tracking the S&P, what you can see here is what we looked at last week was we had not taken out the swing low yet, but this week that has happened. So over here to the left-hand side, this swing low, we've now taken it out, and so we are moving steadily to the downside. No idea when it's going to turn around, but our delta indicator is moving further down as well, so completely bearish for the time being. And then lastly here, let's take a look at the IWM. The IWM, we had pointed out in the past on our weekly reviews that we were running up into this zone here, hitting some supply, and we were thinking, what's going to happen this time? Well, the same thing that happened the last two times. Price was not accepted up here. It was rejected and pushed down. So from a weekly point of view, we had a little bit of a slower turn, but then this week, very large bearish candle to the downside, no upper wick, quite the drop there. Let's see, that was 3% on the week all the way down. And in the bottom of the screen, if you want to look down there, crossing over as well, the zero line, so bearish territory. Looking at this from the daily chart here, very similar. Bottom of the screen, we have been down underneath the zero line for a while, around the 3rd of August. So really right around in here, we crossed into bearish territory and we've stayed. And you can see this is starting to intensify the rate of decline. One thing to keep in mind with these is nothing goes straight down forever. Anyone who's looked at a chart realizes that this period here was a pretty gross sell-off, but you do get bounces like right here and then right here, and then you start to have what you could call a base form in this area after they've decided to stop selling it off any longer. And then after that base forms, you can either shoot back down at the bottom, or like in this scenario, we went to the top side. To the top side, came back down, tested it, price was accepted right here, and then we went to the upside. So right now, this area is quite a bit of resistance and price is not ready to move up there. So keep an eye on all three of these and how we'd like them to do. I do want to pull up one more chart here. This is the TECS. I mentioned this in my newsletter. I can't remember if I mentioned it on last week's video as well, but a trade idea that I had for the public masses is doing extremely well. So this is the bearish ETF for the technology sector, TECS, S for short, TEC, kind of an acronym for technology, or shortened form of technology. I personally didn't take this trade. I am actively in a position on the QQQ short ETF, the SQQQ. It's a triple leverage short ETF. So I didn't take this because those are very similar in movement, but I pointed out this last week. We had a really nice 3-day span here of upward movement when the market really started rolling over. We also moved above the zero line down here into bullish territory. And then what we saw this week, or the past 2 weeks, I guess, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, so I mentioned this 2 weeks ago. We saw a nice move up, a little bit of a pullback here to this line, and then another really strong finish to the end of the week. Now, if you looked over at the regular price chart, that's what I have here on the right-hand side. This has finished up 11.5% from when I mentioned the trade idea. It hit a high of 15% at one point in time. So I'm not sure if you took that or not, but that was a good one right there, showing you how to enter in on that with the Heikin Ashi. So that's it for this week, guys. Hope you enjoyed the video. If you find this content valuable and you like hearing about Heikin Ashi trading, please leave a like and go ahead and subscribe to the channel, and I will catch you later.